Senseonics stock has had a rough go at it in the last year due to COVID and a halt in commercial sales after years of steady growth. But is this company poised to take off both with new sales and a high stock price, or is it going to lay low and relatively unimpressive? Now, I know that this video has been highly requested by my fellow Neanderthals here in Caveman Capital, so I went all in on this video. I have spent so much time on this video. So by the end, you're going to understand Senseonics so well, you might mistake yourself for one of their co-founders. You're going to know this darn company so well. So we're going to cover a summary, how their products work, research studies of the effectiveness of their tech, a competitor analysis, the earnings call that literally just came out. We're going to cover the management, financials, and whether this thing is a good buy or not. So let's go. Let's just jump right in here. So starting off with a summary, Senseonics is a biotech company focusing on revolutionizing how blood glucose is monitored. Gone are the days where you needed to prick your finger and then taste it to see if it's sugary or not. No, I'm just kidding. That never happened. I'm pretty sure. At least I think I just made that up. But blood glucose monitoring has come a long way. There are a few companies who have long-term glucose monitors that don't require these annoying blood pricks. Senseonics is a newer company to the scene with some pretty cool tech, but we're going to find out if it's cool enough to justify an investment in this company, an investment with your hard-earned cash. Now, to start this off, let's pop over to their website and see how they started. So we can see here that they started in 1996. So they started working on this continuous blood glucose monitoring system, and it took until 2018 where SENS, which is their product, was brought to the US. Now, SENS is their 90-day continuous glucose monitoring system. And this is their primary product. So how does this thing work though? Well, I have the answer here for you. So we're going to watch this real short video so you can understand how exactly this thing works. And then I'm also going to summarize it in more plain English because it's still a little bit confusing. So here we go.
A removable and rechargeable smart transmitter with on-body vibe alerts, and a mobile app for long-term and continuous monitoring. The novel SENS sensor works on fluorescence technology. The components include a fluorescent indicator in a polymer hydrogel and an anti-inflammatory silicone collar surrounding a biocompatible encasement that houses the core electronics and optical interface. A tiny sensor is placed under the skin in the upper arm by a healthcare provider in a brief in-office procedure. A gentle, daily-use double-sided adhesive patch secures the SENS transmitter to the skin.
Okay, so you get the idea. The rest of this is filled with some very technical mumbo jumbo. But in summary, their pill-shaped device sits just beneath the skin in your interstitial fluid, which is just the fluid between your blood vessels and your cells. Your glucose molecules in that fluid bind to these small indicator molecules on the outside of that pill-shaped device. The device then shines an LED light at the combination of those indicator molecules and your blood glucose. The more light that shines back, the higher the user's blood glucose is. This is then recorded by the device and sent to your smartphone every 5 minutes for an accurate blood glucose reading. That's all you need to know about their product. That's how it works. Now, this product lasts for 90 days in which you need to get another pill device in your arm. But they do have a 180-day product that has been approved in Europe and is currently under review in the United States. So looking over at this, we can see this is the SENS XL up to 180 days. This is approved in Europe, and we are currently under application for a 180-day SENS system to the FDA here in the US. This product has double the lifespan of their 90-day product and also only needs to be calibrated once per day as opposed to the twice a day for that 90-day product. So this is a big jump up from their current product that they're selling right now. Senseonics is also currently undergoing research on a 365-day leave-in product. And there's actually, as we speak right now, 35 participants who all have the sensor with a modified chemistry to be left undisturbed for 365 days to see if this thing will work. And it's looking fairly promising. However, best case scenario, we won't see this in available product in the US for at least 2 to 4 years. Senseonics is also currently undergoing research on a leave-in 3,000-day. No, I'm just kidding. It's just 365 days right now. But Now that we know what their product does, let's talk about their effectiveness versus their competitors. Now, their biggest competitor is Dexcom, which is a massive company. And they have this continuous glucose monitoring system. That's basically a wire type device. It works very similarly, that is placed under your skin and also lasts for 90 days. So it is very similar to the SENS product. And luckily, I found a research study that compares the effectiveness of this Dexcom product, the SENS product, and one other product. I know, I spent a crazy amount of time reading through this stuff. So we can see a 3-way accuracy comparison of the Dexcom G5, the Abbott Lifestyle Libre Pro, and the Senseonics SENS continuous glucose monitoring devices. So the first thing I wanted to point out here is all 3 of these tested continuous glucose monitoring systems produce higher average MARDSs, which that stands for the mean absolute relative difference, which it's a metric used for blood glucose monitoring. You can think of this as the higher the MARD, the worse the device is at accuracy. So the worse the margin of error is. So they're saying under this study, all of these 3 products produce higher, which is worse, scores than during their in-clinical studies. However, since all 3 CGM systems were worn by the same individuals and used the same meter for comparator, the PG measurements, which is the plasma glucose measurement, we could directly compare their performances. So in the 3-way comparison, this is the most important thing. SENS achieved the lowest MARD, which is good. You want that to be as low as possible, followed by Dexcom, which got second, and the Libre Pro, which got third. Now, I'm just a dumb caveman, but doing some ape math here, this tells me that the SENS product is 10.13% more accurate than Dexcom and 21.6% more accurate than Libre Pro, according to this research study. Now, the next important indicator here is what is the price for each of these products. So I did some digging. The SENS CGM, their product, this 90-day product, is $99. That comes out to $1.10 per day. The Dexcom G6 is $352, again, lasts for 90 days, so that comes out to $3.91 a day. The Libre Pro is only $60. However, that only lasts 14 days, so it costs $4.28 per day. Now, the next thing I was curious about was user reviews, because, as good as this product is, you want to make sure that users actually like this and they're going to use it and continuing using it, because you want people coming back every 90 days to buy this thing, more revenue for the company. Now, it was hard to find reviews except for just anecdotal things, so I'm just going to pull up one that I found. This was a Reddit post that someone was a user of this product, of the SENS product. And they said, now to my personal experiences, I love this thing. I haven't had a CGM before, and when I went to my endo to get one, I chose from the Libre, the Dexcom, and the SENS XL, which is the 180-day product that's not in the US yet. The SENS was and still is pretty new, and it appealed to me since I don't have to change a sensor every so and so days and worry about that. I'm also a bit of a sucker for new tech, and I wanted to try it out, and I'm very glad I did. So there's one anecdotal review, one anecdotal user review. Now, moving on from here, I wanted to talk about their executive management team, their leadership, because I think this really matters, especially with companies who have products on the pipeline waiting for FDA approval. And to be honest, we got a group of geniuses here. It was actually pretty crazy. So we can see here the CEO. I highlighted the items that I thought were interesting. So we can see the CEO, Tim Goodnow, successfully launched SENS in the US only 40 days after approval, which was pretty crazy if you ask me. Prior to Senseonics, Tim was the Vice President of Technical Operations at Abbott Diabetes Care. Now going down from here, we have Makul, who spent 13 years at Medtronic working on active implantable devices in CRDM and neuromodulation space. Then we have Nick Tressler, who previously worked at Vice President, Financial Planning and Analysis at Scucampo Pharmaceuticals, a public global biopharmaceutical company, which was acquired for $1.2 billion. He's the CFO. Now we have Francine Kaufman, who has spent almost 40 years in diabetes care. She's a dedicated pediatric endocrinologist that has served as the director of the Comprehensive Childhood Diabetes Center and head of the Center for Endocrinology, Diabetes, and Metabolism at the Children's Hospital in Los Angeles. Now we got 2 more here. Prior to Senseonics, Catherine guided a novel Class 3 active implantable obesity medical device from intervention through the FDA approval at Intromedics as one of the co-inventors and founders. And then finally, we have Mary Saul, who served as the Vice President of Sales and Marketing for Arkel Medical, Continuous Glucose Monitoring, and Verilight for Type 2 Diabetes Diagnostics. So when I was reading through these, I was like, okay, I don't know if I could pick a more qualified group of people to make a product like this. I was actually kind of blown away by the management team because that's something that I always like to look at. Now from here, I wanted to look at an industry analysis to see where the industry is headed. If an industry is growing rapidly, it's much easier for the individual companies within that industry to also grow rapidly. And then the best ones within that industry are poised to grow even faster than the industry size. And I found exactly what we're looking for here. Global continuous glucose monitoring market size to register 17.24% through 2025. So it says, according to seasoned analysts, worldwide continuous glucose monitoring market size reached $4.2 billion in 2019 and is expected to grow substantially between 2020 and 2025 at a yearly growth rate of 17.24%. And this is largely driven, it says, by poor habits. Poor dietary habits and poor exercise habits. Basically, things are getting worse. More people are becoming diabetic, and because of that, this market is poised to grow. Now, that is unfortunate, but it's good that there are companies that are there to help these people once they're in these situations. Now, next, I wanted to look at some interesting points in their investor presentation. So first, we can take a look at page 3. Now we can see here that the first and only CGM to achieve 8.5% MARD. Now if we think back, MARD is the mean absolute relative difference, which the lower that percentage is, the more accurate the device is. If we look back to that research study, it was close to double what this score is. So it made me a little bit confused how they're getting 8.5% here, but in that other third-party research study was higher, so I just wanted to point this out. We have some milestones here. We can see in 2021, they're anticipating that 180-day sensor to be approved by the FDA, which would be huge for them and their stock price. Now we want to go from here to page 7. And we can see their global net revenue projections. And they think by 2025, they'll be between $150 and $200 million in revenue. In 2021, they're expecting 12 to 15 million. In 2020, it was not close to these because, again, their sales were basically halted due to COVID. And the last page I want to look at was page 8, which I thought was really interesting, their patient profiles. So we can see of their SENS new users, 32% are new to this type of product, this industry, but 68% are previous users of other products who switch to SENS, which is a huge sign that this product is great or that there are problems with these other products. I took that as a great sign for this company. Okay, now for my favorite part, let's go over the financials for Senseonics. And we're a bit in luck here because literally the day I'm making this video, Senseonics had their Q4 earnings call. So I was able to sit and listen to their about 45-minute earnings call. But first, we're going to look at their previous financials just so we can get an idea of what's going on. So we can see here the market cap, a very large market cap of $1.19 billion. We have shares outstanding, 372 million, revenue per employee of 111,000, which is a little bit on the low end. Going into their profile here, you can see no P/E, which means they don't have any earnings. And going over to financials, you'll see what I was talking about earlier about their sales really taking a hit. So we can see up through 2019, sales were increasing dramatically. I mean, they look great, big steps up every single year. However, if we look at the quarterly view, things change a little bit. And this was due to COVID. So we can see as soon as COVID hit, sales dropped to almost nothing. Now we're going to talk about Q4 in just a second here, but I wanted to take a look at all of this just so you can see where we were at, I mean, just 30 minutes before this earnings call came out. So we can see also long-term debt or total debt, total liabilities. We can see also total liabilities of $141 million. They have increased dramatically through 2020. Now, like I said, the most recent earnings call just came out, and they're pretty good, at least compared to this most recent 3 quarters. it's amazing. So first off, the CEO, he came out and said, we don't have a transcript for this yet, so I'm not able to show you anything. I just had to listen to it and take notes. So the CEO, he said that they are projecting $12 to $15 million for 2021 revenue. And he said, expect 40% of that in the first half of 2021 and 60% of that in the second half of 2021. And he seems to be quite confident of this. Q4 revenue for Senseonics was $3.9 million. So if we compare that to the last quarter, I mean, we are blowing that out of the water. However, if we compare that to Q4 of last year, it's still not great because we can see $8.95 million. We are still seeing a huge reduction from the same quarter last year, but at least there's a trend upwards. Gross profit also increased this quarter compared to the previous quarter by $10.8 million. However, that was pretty much just due to them filling orders with written off inventory. So it looked like there was more profit than there actually was. Now, the net loss for this company increased $66 million to $90.6 million. And that increase was largely due to changes in the company's accounting. Their cash also increased by a dramatic amount, and this is probably the most positive thing in their recent earnings call. I suppose we don't need this up anymore. In their most recent earnings call. So their cash increased $18.3 million in Q4 to a total of $187.3 million. Now, the CEO said that they believe that is enough cash to fund the company through their break-even point for profitability, which is absolutely huge, which means they don't have a cash or a debt problem as far as their runway to reaching profitability. Now, they didn't say exactly when they plan to hit profitability, but they say they have enough cash to get them there. Now, they also are saying that they have a goal to reestablish the 90-day product in the next several months. They're going to really focus on that in the US. They're going to increase their sales force as well in the US to really push that 90-day product. They were planning before this year to push the 180-day product, but now they're focusing more on their core product that is already accepted in the US by the FDA. The CEO is asked why he feels so confident about the $12 to $15 million price range for their revenue in 2021. And he said they get this from the feel from patients, that patients are loving their product, and that there's great customer retention, a 75% customer retention for those who use their product for one insertion. Now, even with a much better Q4 than any other quarter this year, we have a price to sales of 242. The industry average for biotech companies is 5.23. So we are much, much higher than the industry average. However, this is a newcomer to the block, so we can expect a little bit higher than the average. I believe the current price has already absorbed all future revenue for the next year and potentially the next several years at the current price point. Even at the high end of the range of $15 million in sales for the next year, we would be looking at a price to sales of 79 if the price of each share didn't go up by a single penny. And that's still on the high range of a price to sales. I believe a fair value for Senseonics is $372 million in market cap. This would be equivalent to a share price of, coincidentally, $1 per share, because they happen to have 372 million shares. That was a complete coincidence. And I kind of hesitated to even make that my calculation, because when it came out, I was like, people are just going to think I made up $1. But no, there were some calculations in the back end that got that. In my opinion, a very bullish buy on this company is a price point of $1.32 per share. If you are very optimistic, you would buy in at $1.32. At the current price, in my opinion, I'm not a financial advisor, I'm not your mom. On a long-term investment, you are betting that Senseonics will hit around $200 million in sales and profitability in the next 5 years, a revenue number that is above their highest high-end estimates from the leadership. So in summary, I like this company as a company. I think their product could absolutely be revolutionary. I think their management team is great. They are so extremely qualified, it actually blew my mind. I almost felt like I was sounding like a shill talking about the leadership. But at current prices, it's just simply not justified. They are just simply too high as of right now. Now, this isn't to say there may not be a short-term play here to be made. With the most recent Q4 upwards trending revenue, we could see a significant short-term upwards swing in price. But of course, this isn't guaranteed. And in the long run, this will be corrected. I hope that this has helped inform you, as I have spent what feels like all day putting this thing together. I mean, it pretty much was all day. So if you enjoy my efforts, make sure to like this video, subscribe if you haven't already, and consider even joining to become a channel member. I would like to thank you for watching, and I hope you have a profitable day.